Good morning and welcome to Purpose Driven Finances, where our focus is helping you use your finances to achieve the purpose and plan for your life. And now here's the host of Purpose Driven Finances, Alan Molina with Serwus Capital Management.
Hey, good morning. Alan Molina, your host, Purpose Driven Finances, president of Serwus Capital Management. Hope you're having a glorious Saturday, and hope the frost didn't get too many of your plants this week. Sitting here with my co-host, Rich Roth, the man, the mystery, the legend himself. How's it going, man?
Just great, Alan. How about yourself?
It's a great day. It is a great day. 6 weeks. No, I think this will be the fifth week talking about grass. No, I finally cut it. And, I heard you on the home show this week, and there was so much I learned from Southern landscaping and what to do, what not to do. And I'm still can't believe that when we built the house, I included zero money for landscaping.
Way to go.
That was good.
Well, I mean, everyone's got their priorities, right?
I was just ignorant.
Oh. And there you have it.
I was just ignorant.
There you have it.
Because I hired a half GC, and they do a great job, and obviously, but you guys did a good job on the show. But Rich, what I thought we would do is this week we're talking about two sections, looking at the QPM and realistically how it handles the current market. And the reason I'm talking about the QPM is I've talked to people, and so many people are like, Alan, I don't understand.
Yeah.
I just don't get it, man. Because the QPM and dynamic asset allocation is so different.
Do they need to get it, or they just need to have a general understanding, right? Because the QPM is so complicated in the way it's evolved with all the different, with all the different investments that are involved in it now. I mean, really, it's just more about having a general understanding of things, right?
It is. I get this question with just about every new client. And that question is, Alan, do you watch my money? Or some form of that? And I say yes. And then if I ask them even a little deeper question, what do you mean by that? Well, most people who hire a financial advisor expect the financial advisor to have some form of process that if the market or economy is going down, they're going to do something in order to stop the bleeding. That's what I have. When I get that question, that's what people ask me.
Do you think most people have the expectation that you're literally watching their account specifically?
I would say some people do.
Yeah.
And I tell them, I don't watch your account. What I do is I watch the investments in your account. Because it doesn't really matter if you have 10 clients or 1,000 clients. I would expect the financial advisor to have the very similar assets in every account. Unless you're at a wirehouse where I was before 2008, and yet wholesalers come through. And a lot of times when wholesalers come through, they have the newest, greatest fund, and normally they will talk about what asset class is hot. And then what they'll do is you'll say, hey, I like that. And then you'll put it in there. That can be a little... And
you may only have that for a few clients who are needing something right at that time. And then 6 months later...
You get something else.
Yeah.
And I'm not speaking, I'm not throwing any stones because I've done it. If I am throwing a stone, I'm throwing a stone at Alan Molina, financial advisor in 2008 who did that. And so, that being said, when I tell people that we don't look at your account individually, what we do is we look at every investment almost daily in the account. And what ends up happening is that they get a sigh of relief. And, I've one of my commercials, if the train's coming down the tracks, get off the tracks.
Right.
Which people understand. But what I have found is people wanting that of monitoring and watching from my account and moving to the sidelines to how it actually happens, there's a disconnect. And so that's really why I'm talking about it, because realistically, the past month has been very interesting from a investment standpoint, because I believe Scott Bessett, I've heard through the grapevine that they are putting their feet on the brakes of the overall market, of going down farther. What specifically have they been doing? I don't know. But that's what I've heard through the grapevine of institutional research, that they are trying to stop the big drawdowns. Because realistically, one thing that amazed me through the month of March is the market was going down in a very orderly fashion.
That's one of the things that has to be scary about, and I would think just from an individual investor standpoint, that's scary about investing in, maybe individual stocks or somebody, or with somebody who's not watching your account on a regular basis, because there are so many factors that can lead to, a recession or a big downturn in the market that aren't related to the specific investment that they're invested in, especially if they're dealing with an individual stock. Like, for example, what we've seen this week with Iran, right? I mean, and you're watching world events, that are affecting the stock market. And, you may be invested in a company that's doing great and you're like, this is a great company. Nothing bad has happened to this company. Why is the stock in the tank? And it has to do with world events or things that, and you're talking about, Bassett and the administration trying to control the stock market. That's scary in a sense.
It is scary because what do you do? And then you have the other, not only that, but you have AI in how it has decimated software companies. And what's interesting is AI is software, but it is decimated. And
what do you mean by that? It's decimated software companies.
Companies that produce software that do things that intelligent human beings would normally do. Companies that produce software, AI has taken their role in a lot of situations, a lot of occasions.
So you don't need the companies that are producing the software because the AI can produce the software
in some instances. But what's ended up happening is, have you ever done any skiing? Because you're from
skiing?
Up north. Yeah.
Twice.
That's more than I have. It's like, is it 200% more than I have?
I wound up in a parking lot, Alan.
Wow, that's exciting.
No, it wasn't.
No. Hopefully it wasn't, when those white boxes with a little red light on them.
The car stopped me. Let me just put it that way.
Word.
It was parked, though. So it was fine.
That's good. Wow, that's impressive.
No.
I've always been a little nervous. But you ever heard of the term getting over your ski tips?
Mm-hmm.
And that's really what I think AI and software has done. But back to I was a rabbit trail I didn't really need to go down. But everything with Iran, and because a lot of people have said America doesn't get any oil from the Middle East. Why is it affecting our oil? Oil was an international commodity, and what's priced in the United States is priced all around the globe, unless you're in China or Russia and you're buying it under the table. So that being said, what I wanted to do is take a few minutes, and we've already addressed that, but I still want to do it, Rich, because everybody wants to hear about your golf game.
Why?
So how long have you played golf?
I don't know, since high school.
High school, so like 12 years.
Right.
You're just a young, strapping young man.
Right.
What is your favorite place?
My favorite place to play golf?
Yeah.
Locally, generally, what?
In the world.
Ooh, I've had the opportunity to go to a lot of nice places. Wild Dunes, Kiowa Resort. I tell you, one of my favorite golf courses, though, the Cascades course at the Homestead.
Mm-hmm, mm-hmm.
Beautiful.
Yes, the Cascades. That's not the one by the Homestead. That's the one that's along the road, correct?
It's right. It's a little bit before you get there. Yeah. The old course is the one right up. Yeah,
yeah. I've been fishing there.
Mm-hmm.
That's that's what I've done.
Yeah.
I've seen bears run across the Cascades.
Beautiful.
That's all I have. It's they won't allow me to hit golf balls up there.
They would.
Yeah, if I had enough money. So, what's your best score?
There or in general?
In general.
I did break 80 2 times.
Wow, that's impressive.
Long time ago.
That's impressive.
In a lifetime.
You know what I do when I play in these tournaments now? I have a ringer.
Yeah, it's a good idea.
Yeah, he's trying for the PGA.
Wow.
And we played, and it was amazing.
Yeah.
They even gave us a 10-stroke penalty, and we still came in first.
Wow.
Yeah. I have no idea why we got the penalty, but they did. They were like, okay. So what was your most memorable shot?
I don't know.
Because I figured you were like, back in, I was on the ninth green or ninth hole.
One that jumps to mind, number 17 at Bethpage Black, where they just played the Ryder Cup.
Oh, nice.
Little par 3 uphill, and tee shot wasn't great, but I chipped in for birdie. Yeah.
That's awesome.
It was awesome.
That's awesome. Now, yes, I know the answer to this question, but do you change how you play according to the conditions?
I should.
You should, but you don't.
I'm a very stubborn golfer.
You know what I did not realize, Rich, that this is part of my ignorance when it comes to golf.
Mm-hmm.
But I did not realize that pro golfers, they will determine the amount of moisture on the blades of grass and will determine how will it affect the golf ball and the trajectory and what they have to do to the swing. That I should have thought of that, but I'm not a golfer, as you know. And so it's evident that if you were a pro golfer, you would change your golf game, your swing, whatever it is. I don't know if you saw it, but I saw it on social media. It was a pro golfer. I think he was mainly playing around. It was some hole, I don't know. But he hit backwards into the wind. He was putting.
Interesting.
And
did it work?
It worked. It was more like a flop shot or something. I don't really know what. I shouldn't get too close into.
No, I mean, it's incredible because we've seen different golfers, right, that can put so much spin on the ball, and if you have the right lie, you could put so much spin on the ball that it can go backwards
because the wind caught. It was so the wind was so it was amazing. So if golf changes, shouldn't your investments? And obviously, that answer is yes.
Right.
Because it's a finance show, and I've teed it up.
Nice.
Nice,
Alan. That was smooth.
I try. You should see me on my first date with my wife. I was smooth, man.
She fell for it, obviously.
She did. The first time she made dinner for me, did I tell you what happened?
No.
About a week beforehand, I said, you know what? We didn't even go out on a date. I said, I'm going to marry you or this other girl.
I've narrowed it down to 2.
And a week later, she was cooking me dinner. And she says, Alan, you need to call the other girl and tell her it's off. It worked.
Yeah.
Hey, now
that's quite an approach.
It was ignorance. I didn't even think about it.
Did you give that advice to your boys? Say,
no,
hey,
they didn't ask me.
Here's a great way to do it.
Right. They didn't ask me for dating advice.
It's you or this other girl, so make your case.
Right. If it was 1,000 years ago, how many pigs you have for me? What is the dowry? But seriously, here's what the QPM did. And, within the past month, it gave us a signal to go long oil. We were long gold. I don't know if you remember, Rich, but we were like 30% gold and gold-like investments. It told us to get out of that and go to oil. Another thing it told us to do was to short bonds. And I was a little nervous doing that simply because bonds, and when you go into an economic downturn or market volatility, they normally do extremely well. But it said to go short bonds.
Let me ask you a question.
I like it.
If you were, and we're talking QPM, which is your proprietary algorithm for investing. And you were talking before about, people want to know, are you watching their money? And you're not watching their money specifically. And that's one of the reasons why it's important to, vet is maybe not the best word, but make sure you're with a financial advisor where you guys are on the same page.
Exactly.
Because if someone wants a certain type of investment and that's not what you do, then it's probably not going to mesh. And you're keeping track of all the stuff everyone with you is doing, not necessarily everything else. Explain the QPM as easily as you can, right? I mean, don't get in the weeds.
Right.
I know you like to do that.
Exactly.
You're good at that.
Mm-hmm.
But I mean, if someone said, give me a quick overview, here's 30 seconds.
Mm-hmm.
What the heck is the QPM? What do you tell them?
It changes investments according to the economic and inflationary landscape.
Okay.
That's really all it is. And as the world changes, your portfolio should change. And that's what it does.
We're not talking day trading.
No. Although in this environment, it's more active.
Uh-huh.
Like in the past week, we've gone from short to long to cash.
What does that mean for someone who doesn't know?
Long, we wanted the market to go up. Short, we wanted the market to go down. In cash, the QPM is like, bro, I don't know what's happening. It's better just to be comfortable.
So if your signs tell you the market's going to get hit it, I mean, something's going on. We're going to war with Iran, or, they broke the peace agreement, so now we're back at war.
Right.
Stock market's going down. You can flip it and be invested
to where
on the
we
downside.
make money as the market goes down.
Okay.
That's a great question. And I hope I was simple enough. I hope so.
Got to be for me, man.
We
Gotta
know,
be
we know
for
you're
me.
a smart guy. But folks, we didn't even talk about the CPI. Rich,
Mm-hmm.
Let me throw this out there.
Oh, here we go.
Let's see how, because we're taping on Thursday. CPI comes out on Friday. The show airs on Saturday. Let's see how accurate
And
we are.
Sunday.
And Sunday, you're right. CPI, I'm expecting to come out at 3.31.
Okay.
Last month it was 2.41. The market expects 3.4.
So that's CPI, Consumer Price Index.
So we're looking at a 90 to 100 basis points up.
Is that good?
No, it's bad.
Okay.
And so let's see what happens.
That means prices are up.
Right.
So that's
Just all you got to do is look at the pump.
Okay.
Yeah.
Sure. Tell me
exactly.
about it.
So, folks, we're going to go 30-second break. Give me a call, 434-316-0246. Our website, servuscm.com. I'll catch you on the flip side.
Hi, everyone. Brian Kilmeade here. Coming up on the next edition of the Brian Kilmeade Show, we'll have the biggest newsmakers, news breakers, and take a deep dive into news you care about. Whether it's breaking news, entertainment, politics, or sports, even pop culture, I'll bring you the latest developments with expert analysis from the big names you know and love. Plus, you never know who may stop by. That's all coming up on the next edition of the Brian Kilmeade Show.
Weekday mornings from 9 to noon on WLNI. And now, back to Purpose-Driven Finances. Here's Alan Molina with Servus Capital Management.
Hey, good morning again. Alan Molina, your host of Purpose-Driven Finances, President of Servus Capital Management, helping you achieve the purpose and plan for your life through financial planning and portfolio management. Sitting here with my co-host, Rich Roth. We talked about the QPM and why it's a little different and realistically what it does in order to help manage portfolios. And the CPI. Now we're talking about retirement plans. And I think we have about 3 or 4 more weeks. And yes, there's so much to talk about retirement plans. This week we're talking about rollover guidance. And the nice thing is what I did is I went through and I put the topics to really discuss about rollover guidance as a question form, as though I were sitting in your seat saying, do I do a rollover? How do I do a rollover? What are the consequences of it? And then that way we can fly through it. I think there's about, 7 questions that people generally ask about rollovers. And so that way it would be easy. Hopefully you've asked these questions. Now, Rich, one of the things that I have seen about people with rollovers.
Now, I'll get you to explain that real quick.
Okay, yeah. What is a rollover? Let's say you work at Genworth.
Okay.
And they did a downsizing sometime in the past 5-10 years.
Or you retired.
Retired.
We'll make it positive.
Make it positive.
Or you found a better gig somewhere else.
See, I like that,
You're
Rich.
laying people off, man.
Well,
Come on.
Well, it's happened. It's happened, Exactly.
But you leave Genworth.
You leave Genworth, and then what ends up happening is you start working at somewhere else. Liberty University, Framatome, wherever you're staying in Lynchburg, you're going to work somewhere else. Well, then you have this, what they call an orphan 401k. It's just sitting out there. You're not contributing to it anymore. You forget to manage it. And what do I do with my old Genworth 401k?
And a lot of people forget about them.
They do. They forget about them. And the problem with forgetting about them is, now if it's like $1 million or $2 million, they generally don't forget about it.
You would hope.
Yeah, right. But a lot of times what ends up happening is they say it's 50,000, it's 100,000, or you get so busy in life that it just falls on the wayside. So what ends up happening is sometimes if you were transitioning out and it was like in, I'm just going to use a bad time, 2008, and you decided to go real conservative. Now it's 2012 or 15, and you forgot to take on more risk, your portfolio is stuck. And so what ends up happening is a lot of times it's that 401k, people forget about it. Now, it also applies to 403Bs and 457s, or even a simple or a SEP, or even an individual 401k. All of those areas you can roll over to a standard IRA, or if it's Roth, to a Roth.
And I know you've talked about this before, but in most cases, in a 401k or a company retirement plan, you don't have the greatest choices, right? You have a handful of options, and that's kind of it, and you do the best you can. But if you were to roll it over, you would have almost an unlimited amount of options that you could invest in.
Exactly. And that's one of the reasons why, when someone says, should I leave it where it is or move it? One of the number one issues is better investment vehicles, because a fiduciary at a company, they generally pick very traditional mainstream investments. Because the problem as a fiduciary at a 401k, 403b, 457 at a company retirement plan is if you do something that is not the best, they can actually sue you and get your personal assets. And so they design a retirement plan that is very safe.
What are you seeing now? I mean, are most of these, plans, from what I remember, you have 20 to 30 different investments. Right. You have one or two large cap growth, one or two large cap value, maybe a mid cap, maybe a small cap, couple bond funds.
Right. And then you have your target date funds.
And then you have your target date funds, and, good luck.
Exactly. And generally,
and in a lot of cases with just one fund family.
It is. Like Vanguard is very popular. And the reason being is it's so cheap.
Right.
And it's index-based. And the issue that you have is, can you get better and can you diversify? Because the government has actually said you can put crypto in a 401k. Now, the problem with the crypto, and I'm not saying straight out Bitcoin, I'm saying the ETFs through, BlackRock or things such as that. What I'm saying is you can also put gold, not physical gold, but like an ETF of
GLD.
Gold. GLD, exactly. And so in that situation, what ends up happening is I have seen that most retirement plans are not that diversified of what they could be. And one big issue is the legality of it. Every time I get a new retirement plan, I tell the administrators, someone's going to come to you and say, how should I invest this? I tell them, say, I don't know, I'm not very good at it, whatever, because you don't want that liability. But back to the original question, should I leave it here where it is or move it? One, you should be able to get better service. Hopefully that's the case. What I mean by better service is answering your questions with a live person. Or number two, better investment vehicles. And what I mean by better investment, you can get greater diversification. Like I'll give you an example. Before we, the QPM on Thursday morning, the markets were flat and long-term interest rates looked like they were going up. So we actually bought an investment that we went short long-term bonds. And in that, it's expected that if a CPI comes out, I don't really know why the QPM said it. It just looked at the price volume volatility. It enabled us that if long-term bonds drop in value over the next 2 or 3 days, we're going to make a little bit of money. And so in a 401k, you don't have that option. Or if you said, you know what, I am scared of the stock market, I want some secured bonds that pay a high interest rate. You can do that in an IRA. Also, you can do an annuity. I'm not a big fan of annuity unless you really need it, and there's specific reasons why you need it. But in a 401k, you can't do that. And so, and then the other what I mean by better service is you can get full financial planning around when you're dealing with an advisor. Like I'll give you an example. I've done some financial planning for a client who owns a business, and they were saying our business was started many years ago. What would be is there a benefit to changing from a C Corp to an S Corp? They would actually, the way it's taxed to an S Corp or an LLC. So I went through and used software, of course, to design and answer the questions, what are the ramifications of doing that? Most people don't need that. But if you need financial planning, a financial advisor will be able to do that for you. But realistically, if they don't manage your money, more than likely they're not going to do financial planning for you unless they charge you. So you get better service, better investments. And if you have better investments, better diversification, hopefully you should have the opportunity for better returns. Not you will. So that answers your question. Did you have another one?
Fees.
They're going to go up. Generally, you're going to have a higher fee. Simply because how a retirement plan at a company works is they use lower fee. That's not the right term, but lower fee mutual funds or ETFs. And so what ends up happening is in that situation, they look at the entire plan. Like Liberty University, Framatome, BWXT, Centra, they have millions of dollars. And so what ends up happening is it looks at the entire amount of assets, not just one person doing ETFs or mutual funds. But this other side of it is you should be able to get greater returns if it's being properly managed in an IRA. And so, and then you say, well, I'm not comfortable with the fees. The second question I answered, should I leave it here or move it? Those three questions, will I get better service, better investments, opportunity for better return? What other questions you got, Rich, for me?
How does it all work? I mean, do I lose anything? Is there, any cost? Are there any tax consequences for rolling it over?
Yeah, I appreciate that question. It's an easy process, very easy. What ends up happening is, like with me, we use Charles Schwab as the custodian. You come to my office, or I come to you, wherever you are. You sign a Charles Schwab account opening document, open the account, and then you contact your plan administrator, whether it's Fidelity, whether it's T. Rowe Price, American Funds, wherever it may be. Then what you end up doing is you say, hey, I want to roll over all of my 401k or whatever, 403b, 457 into my IRA. Or you can do Roth 401k into a Roth account. And then what happens is it's a custodian to custodian. They'll write a check or they'll do a wire, and it'll be made out to that custodian, like to Charles Schwab, for the benefit of the client. It's a non-taxable event. It's generally painless, and it's an easy process. And there is no tax consequences. And I have found it's easier if you need money or to do a distribution. It's easier to do a distribution from an IRA than it is a 401k. Now, folks, we have 15 seconds left. I know you have a lot of questions, and I know a lot of you out there have an orphan 401k, 403b, 457. Call me, 434-316-0246. Hope you have a great weekend, and I look forward to hearing from you.
Returns for illustrative purpose. This is not a suggestion to buy, sell, or use a platform. Only will a suggestion occur after a meeting to determine goals, risk tolerance, and time horizons. Investments involve risks and no guarantee of future results.